Hello and welcome. I am here with Ramesh Cidambi, who is the COO of Dubai Duty Free. Most of you probably already know that anyway, so thank you so much for joining me here today, Ramesh. It's a pleasure to have you.
It's absolutely a pleasure to be here in sunny Cannes and in the middle of a fantastic conference, and very pleased to be here.
Excellent, yeah. I'm hoping you're having a great week so far.
The week has been excellent. The mood has been very positive. The weather probably contributing to it, but everybody, all the brands that we speak to, the other operators, everyone has a very positive sentiment for the year so far.
Well, that's fantastic news for the industry. I'd like to start off with a question about your performance so far this year. Year to date, how would you sum things up at this point, and how would you compare that directly with the corresponding period from last year? Now, I guess there'll be quite a few differences, we hope.
Yeah. No, the year has been amazing. It started off much stronger than we expected, and the momentum that we had in the first quarter of the year continued, and we are double our turnover of last year. We have recovered at 80 to 83% of the sales that we had in 2019, which so far has been our benchmark, rather than 2021. So the performance in terms of the business has been amazing. We have been able to bring back more than 75% of the people that we let go in 2020. And from every metric, profitability, sales, staff, and the general, feeling about the business, it's been a very strong year so far.
Excellent news. What are going to be the most critical developments for Dubai Duty Free in the coming year?
In the coming year, when we look at our business in, let's say, 2 or 3 parts, the first part being the continued recovery of the passengers. This year, we think we'll do 64 million pax. Next year, our forecast is for 78 million passengers. And the forecast that Dubai Airport issues in general have tended to be very accurate. So we are confident in that the additional passenger numbers will come through next year. In terms of our retail areas, next year is a year where we are renovating a couple of key shops, like the liquor and tobacco offer that we have in Concourse B, both the shops, and that's really, let's say, the last phase of the renovation that we began during COVID. So as some people may remember, we renovated both the Food Plus shops in 2020, and we developed the fashion offer in 2020, 2021. So in 2023, it's a little bit of renovation, but the primary focus for us in 2023 will be more engagement with the customers and doing more with the 78 million passengers that we will have, rather than big developments in terms of the retail areas. So the focus in that sense is more on the softer side. So by that, what I mean is the engagement with the brands in order to help engage with the customers better, and improving the customer service on our own part, so that we can have better penetration and more spend per passenger than what we are seeing in the second half of this year.
So less heavy lifting so much as more tweaking and small improvements. So the macroeconomic factors right now, it's a very unpredictable trading environment for everybody across the world. Bearing in mind, I guess, your developments are not as large as perhaps some others. How do you think that these factors are going to influence what you want to achieve in the next year? Both help and hamper, actually.
I think from the point of view of the internal work we're doing and the retail development that we do, the macroeconomic factors don't really have a major impact. The impact of the macroeconomic factors will really be in the customer's propensity to spend. So we are very concerned about the fact that there has been series of price increases during the course of the year because we are in a higher inflationary environment. We are very concerned about the fact that interest rates are rising and will probably continue to rise. we are very concerned about the fact that the dollar has been so strong. So for us, the Indian subcontinent is a major market, currently contributing to 25% of business. So the dollar strength hurts the Indian customer. Europe is a major market, 20% of our business. The strength of the euro and the strength of the dollar against the euro and against the pound continues to impact that customer. So the combination of higher interest rates, dollar strength, potentially higher energy costs in Europe, and softening of economies, those are the real headwinds for us in terms of doing two things: achieving our forecast for next year, which we think we'll do around around 6.6 billion dirhams, but also to achieve the net profits that we would like to achieve against that in an environment of rising costs. So will the customers continue to spend at an elevated level? Because we're already seeing moderation in terms of spend, in September, let's say, compared to January. And even if they do spend, and even if we do get the 6.6 billion in terms of top line, the margin and the profitability will continue to worry us in this kind of an environment where you have this combination of high inflation and slowing economies.
Absolutely. We won't get on to the topic of the pound at this moment in time. I think it's rather an uncomfortable topic for the Brits.
No, but it's an important topic because the UK for us is a very important market. Yeah. And it's also a market where customers who fly Dubai, London, or London, Dubai. And Dubai, London is one of the most important city pairs, for Dubai airport. What happens in London Heathrow and the pricing in relation to Dubai is key. And we already know that on several lines, Dubai is more expensive than London Heathrow. So it is a major concern.
It is a major concern. Moving on to what you contributed to the TR Consumer Forum in Cyprus. Amazing contributions, as always, very valuable and sometimes a little controversial, which is why we love bringing you to these events. And you spoke about the how very powerful big brands at the moment potentially are throwing their weight around a little in the travel retail channel, and how that's having a less than ideal effect on the relationships between operators and brands. Yourself, Dubai Duty Free is not by any means the only company that is feeding that information back to us. Again, in the wake of Cannes and during obviously the week of Cannes itself, how is Dubai Duty Free looking to rectify those sort of relationships?
Yeah. I think, from a Dubai Duty Free point of view, we try and balance two things. We try and say to the brands that the current trading environment is fantastic, that we will get the additional we think we'll get the additional passengers next year, which will benefit the brands and benefit us. But just to be mindful of continuously pushing price increases through the channel with the sort of view that the price increases will not impact demand. So one of the things that we keep hearing from the brands is that so far they don't see the impact on demand, price increases, which I was saying to one of the brands that it cannot be true in aggregate. In aggregate, if brands in confectionery, food, liquor, tobacco, if all of them push price increases through, how can it not affect the overall demand? Now, certain categories will be more elastic and certain categories will be inelastic when it comes to price elasticity of demand. But in aggregate, we are concerned. So we are saying to the brands that to be cautious, when they do this, and to just be mindful of the fact that if you have a weakening economic environment and a strong dollar, and the consumer already impacted by higher costs in his day-to-day life, then the share of spend in travel retail and when they're in the shops is bound to be impacted. So Nassim Nicholas Taleb said, every squeeze is followed by a glut, but not every glut is followed by a squeeze. So we could be in a temporary situation where there's a shortage of some items, and you can increase prices, and still not impact demand. But it's hard to see in an environment where the supply chain bottlenecks gradually ease, where the problems with shipping gradually ease, the general availability of products improves, across, whether it is technology, other items, and headwinds in terms of economic factors not having any impact. So we are not confrontational, with the brands. We are not saying to them that, we will not accept price increases, or we won't do this, or we won't do that. What we are saying to them is that just be aware and just be more cognizant of it when you are having your internal discussions. Because we understand the inflationary pressures on the brand. We understand the increase in commodities. We understand the big increases that have been there in packing materials, shipping costs, and so on. So we are not ignoring those factors. But how much can the consumer take, is the question. And in general, as the frequency of travel increases, as travel becomes more predictable and there are less restrictions, you also automatically see a reduction in spend. Because all these things that we talked about during COVID, or pent-up demand and all that, is basically gone. Most people now, have 3, 4, 5 trips, that they can foresee in the next 6 to 9 months, compared to, let's say, in 2021. In 2021, on your app, you might have 1 trip or 0 trips. But now, so the spend has moderated. The price increases also flatter the spend. So we say that, we are $2 more than 2019, or $3 more, or $4 more of 2019. We think that 50 to 60% of that increase in the spend is coming purely because of price increases, without any increase in volume.
Right.
So now the brands will counter that by saying that there is premiumization, that people are spending, more money buying less. Let's say volume. You buy a more expensive liter of whiskey as opposed to less expensive liter of whiskey. So the amount of whiskey that you're selling in volume is down by 20%. But these are all things to be aware of and to be cognizant of. In a softening economic environment.
Absolutely. I guess the argument from the brand side is that they are offering value, but just not in the traditional monetary value terms that we've talked about in the past, and perhaps not as competitive on price, but they're offering the more premium products, as you say, upselling, and also the travel retail exclusives that Dubai Duty Free enjoys, obviously. At a lot of the time, you get a lot of the sort of first bite of the cherry, but that's through your great partnerships with the brands.
And in fairness to the brands, and one of the things I want to say, in the middle of the Cannes Week, is that their willingness to invest in the channel, the willingness to do strong activations, the willingness to do strong promotions, the willingness to do travel exclusive products, the willingness to really be cognizant and do meaningful things in terms of sustainability, all of that is very strong. And the big brands which were a bit more reticent about the channel and investing in 2020, 2021 have definitely come back in 2022.
That's great.
So from a customer's perspective, he would see a more exciting retail offer at Dubai Duty Free because of the work that is being done by the brands. So that is a positive step. But it's that against pricing. It's
a balancing act, isn't it? Always. Well, I'm delighted that you were able to join us here today. Thank you so much again for your very valuable contributions. I'm sure our viewers will really learn something from what we've been discussing today. So, once again, thank you.
Thank you. Thank you for having me.
Thank you.